Hello everyone, welcome to mangomonkey Learns Money. In today's video, I'm going to share with you the 4 things that I wish I knew and practiced when I was investing in the stock market. The goal of my channel is to help you guys become a millionaire by the time you are in your 30s. And I hope that by me sharing some of the things I wish I knew, you might be able to reach this goal a little bit faster than me. So without further ado, the first thing that I wish I did is to be more brave and confident when I was buying shares. I could have become really rich if I had invested in AFG in the ASX Stock Exchange in March 2020, especially if I had purchased $1 million worth of this company. I could have bought it for $1 and now, as of late November 2020, it is trading around $2.50. That's 2.5 times the price I could have paid for the company. In fact, I just remembered that I did purchase a small position of this company at $1.37 in April, but then I sold it for $1.41 a few days later because I got scared, because I got nervous. AFG is actually a very safe business. It's a mortgage broking aggregator and also a lender. I was afraid it would lose money as a lender because of the coronavirus pandemic, but I forgot that the loans that they do are home loans. That means the loans are secured by either a house or an apartment, so the chances that it will lose money is very small. This leads me to my second point. The second thing I wish I did when I was buying and selling shares is to not sell just because I have made a 10% gain. There was a company I purchased in September and this was Prosper. The ticker code is ASX PGL. I bought it for 70 cents and I sold that for 78 cents in November. I sold a little bit before the vaccine news came out and a little bit more after the vaccine news came out. And that's because I was too lazy to cancel my style order that I already placed before and was partially fulfilled. So Peter Lynch talked about a company which is a 10-bagger, and a 10-bagger is a company that goes up tenfold during your investment period. The third thing that I wish I did during my stock investing is to not sell at a loss. I sold shares in the red during the global financial crisis, and most of them have now recovered to the pre-GFC levels, in fact higher compared to that. But because I have already sold them, mentally I do not want to buy again. So I never ended up buying again, and it took me longer to recover my losses. History repeats itself and it happened to me too, so I promised myself not to sell shares at a loss again, but I did it again last year. I bought a lot of a company called Realogy. This is a real estate company. I bought it mostly at $30, but I sold it at $7 last year because it kept dropping like a knife, but now they are above $10. The fourth and final thing that I wish I had done is to not invest in speculative stocks. That is those companies which have not made money yet. There are 2 ways to think about this. So the first way to think about it is, remember the 10-bagger company I mentioned to you before? Even if I have one 10-bagger and my other 9 companies go completely bust, I still haven't lost money. And the chance of those 9 companies all going bust is very small. So theoretically I can invest in 10 speculative stocks and still do well. But what if I do not have one 10-bagger at all and all 10 companies are complete duds? Also, it actually takes a lot of time and effort for me to research 10 companies And I'm not a full-time investor, so I don't have time to do this kind of research. So I prefer to do some superficial analysis, more than a few minutes, but maybe just 1 or 2 hours for each company instead of a few days for each company. It's easier for me to complete my research within a couple of hours if the company has made a profit already. If I am super lazy on that day, I can even look at only the PE ratio, and if it is around 15 and the company is a well-known name in the industry, chances are my investment will do just fine. I'm only sharing what I think about my experiences and how I have interpreted them over time. But I think if I had done these four things, I would have achieved better investment returns.